Welcome to TheoTrade. This is Don Kaufman. It's August 17th, 2017, doing the Theo Night video. Well, what are we seeing here? Volatility Thursday. I'm actually referencing the fact that, of course, today is Thursday, and last Thursday we also saw some fairly extreme volatility, actually not dissimilar at all in terms of some of the price action that we saw today. The day ultimately started out with really just some mild sell-side activity in the overnight session. And I'm just kind of highlighting a couple of things over here. Just some really mild sell-side activity. When I woke up this morning, the S&Ps were down about 6. And things really did not kick into gear on the sell side until about 20-30 minutes after the cash open. It was a pretty continual and gradual slide thereafter. Really important level was hit. And I've talked about this almost to the point ad nauseum here on the Theo Night videos, 24.38. We literally came down to 24.38, stopped on a dime, and then ultimately exploded through it into, well, what we're seeing right now here in the after hour is 24.28. Okay, not everybody here trades on an intraday basis. Not everybody trades like, all day, every day. I do. And one of the important points to be made over here, this slide through the 24.38, there's nothing now down till about 24.11. Allow me to show you exactly what that looks like here in the S&P futures. There's 24.11, and we are right in the middle of this seam over here, wide open to it. I want to give you from a probability standpoint here. Probability standpoint, the easiest aspect just to throw out there is for us to bounce tomorrow right back to 24.38. So from a probability standpoint, that is what you would expect. However, I'm going to counter that. I told you earlier this week that I was rather bearish, and a lot of it had to do with the expected move, which I'll come back to here momentarily. But there has been a drastic change, in the entire marketplace that we have not seen, since really pre-election. And I'm going to show you exactly what that is and why it's such a bearish tone for the marketplace. And again, why I think that 24.11 is an easy shot for the S&Ps to take, possibly even into Friday. So think about Friday right around the 24.11 handle in there. All right. So why the big change of tone? We're going to go over here to the advanced decline. I look at this throughout the course of a trading day. Now, people look at advanced decline lines all the time. I don't look at the S&P 500 advanced decline line. I could care less. There's 400 stocks in the S&P 500 that really don't matter. These are the stocks that do matter. What you're looking at today is, 102 products in here. Every one of them is ultimately down. Obviously, stocks like Google count twice. There's Google L. Anyway, the point being, this is the first time that we have seen full-blown correlation, into a close on a sell-off type day. This didn't happen last Thursday. This didn't happen back in March when we sold off. It hasn't happened in any of some of the recent bouts of volatility. This is an asset flush. This is what it looks like when really, traders want out of their positions at any cost. And yet we only closed down. So a little perspective, we only closed down here 1.5%. The Nasdaq, about 2%. And it's what you would expect, in a marketplace seeing sell-side activity. There's nowhere to hide except, traders did go out there, and what did they do? They started buying the bonds. So if you take a look, markets today, full-blown correlation to the downside. Bonds were purchased, volatility came up. Note, I'm actually, showing volatility futures, not so much the VIX, which is up about 30% today, but the volatility futures are really what matter to the traders, right? Because that's the tangible product they can trade. In addition to it, so this is like, newsflash, I can see the markets are down. Well, I'm trying to provide a little bit of evidence here for, this sell-off was vastly different than a lot that we've seen recently. We've got, again, full-blown correlation. We've got volatility products, moving. We have the VVIX, which is the volatility of the volatility index, Just last week, it spiked to 135, Very rare to see volatility come in and then explode back into the 120 level. At this point, hey, I think you really need to consider, Friday, regardless of what you think, you need to really consider what Friday and even what Monday are going to look like. When you get the VVIX north of 110, things can get intense. Things can get crazy. It's kind of what we say, get under the desk, put the helmet on, and start rocking back and forth. Here you actually have, multiple days where it's actually traded north of 110. From this point on, you have to recognize what it really means is everybody that needs protection, they went out and got it. And they got it by buying volatility options. The only thing that moves the VVIX is trades, specifically trades inside of the VIX contracts, which once again did, almost 1.3 million contracts in the VIX. On another front over here, the XLF. The XLF, I've been keying into this day in and day out. I ultimately stated, a week ago, the XLF is in the middle of some type of a major reversal. We pointed out what we called a kind of a key reversal day, but the XLF looks like it's in full-blown correction over here today, being the brunt of that. This was the most substantial down day in terms of the XLF, really in recent history. Is there going to be follow-through to it? Absolutely, I believe so. We've actually cracked through levels. Any bounce at this point, I believe in financials, is going to be sold into. That's ultimately, a lot of my conjecture of why the S&Ps are likely to sell off. One area of kind of discontent for me today, if you take a look at the S&Ps, right, they're down 1.5%. You take a look at the Nasdaq, it's down 2%. An area that really bothered me throughout the course of the day, if you look at stocks like Google, Amazon, even Facebook over here, Microsoft, and I'm just flipping through, each of them, they're not down corresponding to what the Nasdaq is down. So ultimately, what I kind of call the big boys of tech over here, that's Microsoft, Facebook, Apple, Google, Amazon, they're not down in accordance with what the Nasdaq was down. That specifically could be the weak part of, and the weak point, I should say, inside of tomorrow's trade. Now, flip back around. So obviously quite a bearish tone over here. I talked about specifically yesterday a trade in FedEx. Either you got it on early this morning or you didn't get it on. This morning we opened a little bit soft in terms of FedEx. Bounced. Again, a little bit soft in FedEx. We bounced a little bit. I actually talked about the FedEx trade in the chat room this morning. When I say you either got it on or you didn't, well, that goose is pretty much cooked at this point. It was absolutely the bounce, and a more bearish bounce, and that is a bounce that was ultimately sold into. Again, for the remainder of the week, which is simply Friday, we're also going to look at the SPX, Last thing we're going to look at this evening here is the SPX, the S&P 500 index options, A reminder, there is a vast expected move throughout the course of this week. It's over a $40 expected move, all right? The week began right here at this central point, This is $40 approximately higher, $40 lower, Here's where ultimately we close today. There could still be drastic room for improvement, if you will, to the downside. However, one thing I want you to keep in mind with all the volatility today, you need to go look specifically in the SPX options. The SPX options have an expiration both in the morning, The morning expiration has about a $12 expected move. That goes off of the opening settlement. Throughout the course of the day, we're still expecting almost as much as a $17 move tomorrow. So when you think the volatility, it's dead, Don, it was a one day, it was a flash in the pan, just like last week, then why is there a $17 expected move attached to the options for tomorrow? A $17 move. Again, look at the irony of where that would ultimately take us. So here's the SPX at 2430. A $17 move takes us right into that area of 2411. It correlates pretty much to 2411 inside of the S&P futures. With that, thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.